All right, let's get right into it. Today, we're going to talk about a super critical task, cleaning up a restaurant's books. We're going to uncover the secrets that can take messy financials from being a huge liability to being one of the most powerful tools an owner has.
So, picture this. You get that frantic call from your restaurant client. They've decided to sell, and the realtor needs a profit and loss statement like yesterday. This is it. This is the moment of truth for any bookkeeper. Are the financials you've prepared an asset that's going to help seal the deal, or a liability that could sink the whole thing?
And let's be totally clear about this. A P&L that's been slapped together with a bunch of shortcuts and guesswork isn't just a little inaccurate, it's an absolute deal killer. It will send serious buyers running for the hills and raise so many red flags for lenders. The stakes really couldn't be any higher.
So, where do we even begin a cleanup like this? We start with the number one mistake, the biggest offender of them all: payroll. It's an area just riddled with these hidden traps that can completely warp what a restaurant's finances actually look like.
And here we see the classic battle, right? The oh-so-tempting shortcut versus the professional method. It's just so easy to grab that one big debit from the bank feed and call it a day. But the correct way, the way that guarantees accuracy, is to use the official payroll reports as your absolute source of truth.
So, why is this shortcut such a big deal? Well, that single debit from the bank isn't just wages, not even close. It's this whole bundle that includes the employer's payroll taxes, all the employee deductions, everything. So when you book that entire amount as wages, you're actually overstating the payroll expense, making the restaurant seem less profitable than it really is. And that's a massive red flag for any potential buyer. The fix, thankfully, is a pretty straightforward three-step process. First, you always use the payroll reports. They're your Bible. Second, you break out the numbers into their core pieces, the gross wages, the employer taxes, and so on. And finally, you use a clearing account to make sure it all balances out perfectly. Just making this one change instantly boosts the professionalism and the accuracy of the financials.
Now, this whole idea of not just blindly trusting the bank feed, well, it leads us directly to the next huge trap people fall into: confusing the deposits hitting the bank account with actual sales revenue.
This quote really says it all, doesn't it? A restaurant owner sees a big $20,000 deposit and thinks, awesome, a huge sales day. But that one number is incredibly misleading.
You know, just like with payroll, a bank deposit is a total jumble of different things. Sure, true sales are in there somewhere. But it's also been hit with merchant fees, it's got employee tips and sales tax mixed in, and neither of those is revenue for the company. Plus, you might have payouts from delivery apps that are days late. Just lumping that entire deposit into the sales category is a critical error. So what's the fix? It's simple. Stop using the bank statement to book revenue. Your one true source for sales data is the point of sale system. The POS report gives you the real, clean sales numbers, all broken down correctly, before any of those fees or taxes or tips get involved.
And this brings us right to one of the biggest sources of confusion in modern bookkeeping: those third-party delivery apps. We're talking DoorDash, Uber Eats, Grubhub, you name it. And trust me, they can be a total nightmare if you don't have a good system.
The absolute key here is to completely reframe how you think about these apps. They are not a source of sales. They are simply a method of payment, what we call a payment tender. You need to think about them in the same way you think about American Express or Visa. The sale happens in the POS system. The app is just how the customer paid.
So the proper workflow looks just like this. You set up a clearing account for each and every app. Then all your sales, including from the apps, get recorded from the POS. That's crucial to avoid double counting. When a deposit finally comes in from an app, you just apply it to that app's clearing account. Then, at the end of the month, one single journal entry takes care of all the commissions and fees. This keeps the P&L looking clean, with your real sales revenue right up top and the app fees shown as a clear, separate expense.
Okay, so we've covered how to fix the big, common mistakes. Now let's kind of elevate our thinking. Let's move beyond just being a fixer and start talking about how to provide real strategic value for your client.
Let's just take a look at two different ways to view the cost of goods sold, or COGS. You've got the tax-focused view, where you just lump every single food and drink purchase into one giant COGS bucket. Yeah, that might be fine for the tax return, but for the owner who's trying to actually manage the business, it's pretty much useless.
And this is exactly why the details matter so much. The second you break out COGS into useful categories, like grocery, liquor, and other beverages, it transforms from just a number into a powerful management tool.
Now the owner can instantly see where their money is going. Is the liquor cost creeping up? Is there waste happening in the kitchen? This level of detail helps them spot those money leaks and actually do something about them.
This right here is the fundamental shift in mindset. As a professional, you're not just a data entry clerk who's logging expenses. You are building business intelligence. You're creating the financial dashboard that the owner needs to make smarter decisions, control their costs, and ultimately boost their profits.
So, let's circle all the way back to where we started, that urgent, panicked phone call from the client who wants to sell their restaurant. How has all of our work changed that situation?
Well, because you applied these professional methods, you handled payroll correctly, you used POS data for sales, you tamed the delivery apps, and you detailed the COGS, you've built financials that show the true health of the business. And that's what inspires confidence in buyers. That's what keeps a deal moving forward smoothly instead of falling apart.
This level of detail and accuracy completely transforms your role. You're no longer just a compliance function. You're providing financials that can actually stand up to scrutiny. You're building tools the owner can really use to improve their business. You're becoming an absolutely indispensable strategic partner.
And that's the key takeaway I want to leave you with. It's a question to ask yourself about your own work. Are you just entering expenses, or are you building value? Because that is the difference between being a cost and being an investment. And that is the path to becoming a true hero for your clients.